All right, this is Jeffrey Scott. It is 6:47 p.m. on December 1st, 2013. Early futures are up a little bit, up $1.60 on the S&Ps, a little bit more percentage-wise on the NASDAQ. The Dow up about 23. So that's the context as we start. Pull up my PowerPoint, a little bit different show today. So I call this my HGSI Weekend Review. My name is Jeff Scott. Here's my email, jeffrey@highgrowthstock.com. And I put those Z's there not because, as my wife would tell you, that I put you all to sleep with these webinars, because that's about what the market did to me last week. You'll see that the few positions I left behind were relatively flat. Low volume week, sometimes you get big moves one way or the other, but the low volume really, I think, skews everything, and last week most of my major positions fell asleep. Start my PowerPoint. So disclaimer, this is for educational purposes only. I'm a doctor, not a broker. Most positions lose all their money in the market, and I'm truly independent. I pay for all the tools that I use, and I basically do this for fun and personal interest, and not because anybody's paying me to do it. If I was to be stuck, I don't need all the programs that I bought, although I would never tell that to my wife. And what I need on my desert isle, besides high-speed internet, is TradeStation or Thinkorswim to do my trading, HGSI for analysis, EdgeRater for multiple things, as you'll see tonight, seasonal analysis. I use a number of different programs. And then Woodward and Brown are a lot of the techniques I've learned that help me become a much better investor. Today will be a little different, as I'm going to actually take a departure from my usual and spend a few more minutes looking at seasonality, because I'm a big believer in that. Speaking of believers, I'm also a believer that this is your own responsibility. You can watch me, you can learn from me, as you can read, watch, and learn from others. But at the end of the day, it's you who are responsible for managing your money. And so, as I learned from Ian, this is your chance to become your own guru, and that whatever that means to you. What it meant to me was read a lot, go to a lot of live meetings, develop styles that were based upon things that I learned, probably changed them a little bit, and that became me. Whether it's Ian and Ron of Woodward and Brown Investing, Alexander Elder, O'Neill, Morales and Katcher, Bigelow for candlesticks, Will Ann about more effective volume, Van Tharp because of position sizing, and money management, and then most recently Anna Colling looking at how volume impacts future pricing. Some of the websites are here. I highly recommend every one of these books. The Gronke books are a series of very easily readable books for people who are now retired that are more interested in income than growth, and talks a lot about how to take 10% out of the market twice a year between covered calls and naked puts. So a little bit about the seasonality. What is seasonality? To me, seasonality are things that have a tendency to recur over and over again at the same time of year. Now, it can be very high level. It could be sell in May and go away. That means typically the summer months are soft. The Santa Claus Rally, the January effect, which has moved into December. It's also reality is that certain sectors behave different in different parts of the year. For example, retail does better in February. Perhaps that's when the numbers come out from their holiday reporting season. There's seasonality in refiners, fertilizer, and many other types of sectors. And then from a stocks perspective, from a top-down approach, I can take the stocks that I find from the top down and run them through a seasonality screen to make sure I'm not buying when the market is usually selling. And then I can also scan them. I have many tools for seasonality. I have Magenta Trader, Best Choice Software, TradeMiner Pro, and then recently got introduced to a program that I used as an app at www.seasonanalysis.com. I'm biased. I think that the first three all have value. I think Magenta Trader is the best charting, realistic charting, and their algorithms are very nice, as well as the educational programs that they offer. Best Choice is sort of the old kahuna, and it has a calendar function that I find very useful. TradeMiner Pro is from geckosoftware.com, inexpensive product that can look at futures, forex, or stocks. And then the season analysis website, I don't know much about the real product. I just use the app, and it seemed fairly primitive, but their website looks like they've got a full-featured program. So let's talk about seasonality for a few minutes. So I'm going to show you a number of these screens. They come from OmniTrader, which to me is not a seasonality program, but built into OmniTrader is seasonal patterns. And the first line is the year, or the first column, and you can see that I indexes, I've got 23 years worth of data. Going across from left to right are the months of the year, and it shows the relative performance of, or absolute performance each month. Now, you have the first line is monthly, so that would be the average monthly return. The second time is how often it's in that direction. Okay. 82% of the time the market is up in December, 65% in November. And then it shows you by year what the performance was in that month, and then the overall performance of the market for that year. So let's take a look and see what we can find. Let's start with the S&P 500. What you see is that the market has lots of green in the last quarter in January, and you see some redness during the June, August, and September period of time. Sort of the sell in May and come back in October. October, despite all of our fears about it being the worst month because there have been some major corrections there, actually a positive month 2/3 of the time. But you can see December not only is 1.9%, the largest gain of the year in the S&P 500, it's positive 82.6% of the time. If you look back over 23 years, 2002 was horrible, was down -6. You were down -2 in 1996, and then you were down less than 0.1% in 2005 and 2007. Even 2008, which was a horrible year, you were up in December. So overall, for the S&P 500, easy to see why it's called, considered to have strong seasonality. If I look at the Dow, picture looks to me almost identical, 73% of the time up 1.8%. If I look at the NASDAQ composite, I see up 2.5%, so a very big move and up over 60% of the time. So you notice on the NASDAQ and somewhat on the Dow, you have more red boxes than you did on the S&P 500, but still the majority of them were positive. Now they had a couple bad years, 2002, the NASDAQ was down 9.7%, 2000 in December was down 4.9%. Think about the year 2000 effect where the stock market was supposed to sell off because of the 2000 bug. You can see the NASDAQ was up 21% in December of 2000. So up most of the time, average month up 2.5%, but some very wide swings. Now interestingly, the VIX should be opposite, and the VIX is stronger during the summer, and the VIX is weak in this time of year, which goes along with the lower volatility and higher market performance. If one looks at sectors, let's see if we can glean anything from this. Well, first of all, if the market's up strong, most sectors are up with it, and you can see that the last quarter is strong in materials. Energy has a big month of December, 2.3%. Industrials, 2%. The financials seem to be sort of up and down in the last quarter of the year. And in fact, weak in the first January and February. So of this page, I would say financials look the least impressive. How about technology? Up on the top, sort of flat for December. Clearly, technology historically is weak during the summer months. December has seen some pretty bad months for technology, 2002 down 13%. Now, you might think that with the market that I might be buying more discretionary things because of Christmas than staples, and that's true. And you could see that staples are actually down for December while discretionary purchases are up nearly 2%. So again, some seasonality within the consumer purchasing side. And then lastly, utilities, up about 0.5%, half the time they're up, and medical strong as well, 2.3% up nearly 80% of the time. In fact, if you look at January and December and November, you have a period of time where year over year, healthcare outperforms the marketplace. So I also will look at stocks, and I'm going to jump into real life, but this is a picture of U.S. Steel, and just in case the program backfires on me, let me just show you what I see here. So first of all, this is Magenta Trader, and I'm charting this is the last 6 months or so, candlesticks of U.S. Steel. The yellow line is a 5-year line, I believe. It's either 5 or 10 years. I think it's a 10-year seasonality line. Let's see. I believe it's 10 years. That's taken the percent change on a given day for the last 10 years and plots it, and then it scans for me to find me times when I should be long versus times I should be nervous. And what I see here is that U.S. Steel has been in a nice little range, and we're about to go into a very seasonal, strong period of time. So whether it's Cleveland Cliffs, whether it's U.S. Steel, you'll find that there's a lot of very strong seasonality in the market for steel at this time of year. How about Netflix? You know, is Netflix a buy or a sell right now? It's expensive in dollars. It's got great growth rate, but it also has a high price-to-earnings ratio. Is it meaningful to you if you found out that over the last decade it has a huge move starting about January 20th? Now, to give you an idea of how huge of a move, average move has been, I think that says 8%, 10 years up, 0 years down, best year 20.7, no down years. So wouldn't that be interesting thing to be buying beforehand? Maybe you could think of some call positions that based upon an expected move of 10%, could you buy some cheap calls and potentially have a good return? So I think seasonality, and we'll go into the program in a minute. Meeting notice. This is tentative, and I'm doing this to gather an understanding of attendees. I go to these meetings and do these meetings not to make money. In fact, I lose money because I take time away from trading and analysis. I do it because I love to teach and give back, and I always learn from the attendees and other instructors. George Lee and I just recently in October did a great meeting in Anaheim that was well attended, and we'd like to do another meeting in New York. So I've got some tentative space arranged. So the meeting would be Saturday and Sunday. I believe this is President's Weekend, February 15th and 16th, and an optional meet and greet on the 14th. The location will be somewhere in the Upper West Side. I'm trying to keep costs down, and that means I'm going to try and do it in my condominium's meeting room. The topic, great growth stocks, how to find them, and how to trade them. This will be real life using many tools that we find common, HGSI, Magenta Trader, Edge Rater, Thinkorswim, and the instructors will be George Lee and myself and perhaps special guests. I mean, we really lucked out with special guests in Anaheim, getting Ian Woodward and Gil Morales both to come on their own, and frankly, like, you know, we're not compensated. They came down just because, like me, they like to give back. I'm doing this as a break-even, but there are costs, which include refreshments, the room, George's travel and accommodations, and his fee. And I anticipate if I can get 10 folks to attend, that there'll be about $750 per person. Now, if I get many more than 10 confirmed, then I will potentially be able to lower the price back to person number 1. So I need to know if there's interest. So my email address is jeffrey@highgrowthstockdoc.com. 4 or 5 people indicated interest last week when I did this. I'm doing this more formal this time because I probably got to get 15 to 20 showing interest for me to go ahead and put down deposits and take some financial risk on it. Lastly, just to remind everybody, the program that I use is HGSI. It's on highgrowthstock.com. Starting in the next week or so, I'll be announcing a series of beginner programs where it won't be about the market. It'll be about how I use the program to figure out the market. And if you're not a current user of the program, why not? Go to highgrowthstock.com, and what you'll see on the splash page, see if I can get out of here, will be a button here that says free 30-day trial. My webinars are on my blog on HGSI, and so you can go back quite some time here. They're also on YouTube. Using something like YouTube Downloader, you can easily download them and view them offline if you want to have something to help you sleep at night. And you also have Ron Brown's videos as well. I do them on a weekly basis. Ron does them especially when there's a change in the software, as there was recently. And then you also have Ian Woodward with his outstanding blog. Big fan of Ian, as I know a number of you, and you can go there to look at that as well. So enough of my background discussion, and let's jump into some trading. So let's go to Magenta Trader, and let me just show you how I use it. So in the window on the left, docked are a lot of information. Navigator gives me information about what I'm looking at. So I can see here that I've got 5- and 10-year seasonality. So the 10-year seasonality includes 2003 to date. The 5 years, just the last 5 years. I have the dates of earnings indicated, so you can see the impact of earnings on the price. The 5- and 10-year seasonality line use a proprietary algorithm that gives you an idea of the anticipated movement or location, direction of the stock for that period of time. The green and the red, and I usually like to take it out to 30 days, gives me an idea of where I sit as far as seasonality, strong green and weak red. And down here is the screener, which I'll show you in a few minutes. So I mentioned U.S. Steel. Let's just take a quick look and see what we see with U.S. Steel. So I've got just the 5-year on this, or just the 10-year, which is fine. You can see, first of all, that U.S. Steel has been in a nice channel. It's pulled back to the middle of the channel. It might be nicer to pick it up if it pulled down to the lower channel. But you see just a huge upthrust in U.S. Steel. And we look at it, here's 2012 in white, nice move up. 11, flat. 10, huge move up. 9, huge move up. 8, flat. 7, move up. 6, flat. 5, move up. 4, flat. 3, move up. So you can see you don't have any big drawdowns in the month of January, December and January, and you do have a number of big moves up. So this is what I'm looking for, stocks in a trading range going into a period of strong seasonality. I mentioned Cleveland Cliffs is another one in the same group. You should see a similar pattern where a lot of strength coming in the market. And I'm going to go back to U.S. Steel because over in the, actually I don't need to do that, the data side, it tells me that seasonality between November 8th and December 11th, average return, 8 years up, 2 years down, 12.5% is the average up, and 0.2 the average low. The next run is 1212 to 1225, 7 years up out of 10, December 30th to January 10th, 7 years up out of 10, and you can see 7.5% average returns. So I'm looking for periods of time when the market seasonality is a strength and not in the face of my stocks. So if I'm doing top-down, then I might identify stocks that look interesting from a fundamental perspective or a technical perspective. And the reason why I got a little quiet is I'm looking for my little cheat sheet. Oh, here it is. And for example, when I was going through my review today, two stocks that caught my interest. One was SRI, Stone Ridge. And I liked Stone Ridge because in a longer, let me pull it up in an HGSI candle, HGSI chart. So if I look at this on a weekly, just to get an idea of where it's been, I know it's in an uptrend. Well, it's been an uptrend since November. I guess kind of sideways in a big range over the last couple of years, but certainly an uptrend over the past year from about $4, $5 up to $12 today. So it's in an uptrend, which is sort of my requirement. I knew that because it was above the 200, which is above the 50. It's squeezing here on the Bollinger Bands, breaking out above the squeeze on a kahuna. So based upon the usual things that I look for, this stock met many of the criteria that I have for liking to buy it. So then, I then wanted to make sure that I'm not buying it at the worst time of the year. So I took a look at Stone Ridge, and what did I see? I see that it's in a period of time where the market usually goes up. So that's a favorable thing to me. So what I see here is a stock that is, we know, pulled back, but did have some momentum come into the stock yesterday or the last couple of days. And if I look at it and shorten out my time frame, I'm in a short-term uptrend, and I have a stock that's growing 100% per year based upon this uptrend. In the next 30 days, the average return would be 4.8%. Seasonality between December 3rd and January 13th, it's up 8 years out of 10, with an average period up of being 17%. So what I see here is a very attractive stock that I liked on traditional technical analysis, and that I like even more when I see the seasonality. Another one that I saw today was Winnebago, WGO. And if I look back on the traditional charts, this is one I've liked for some time. It's in the same group as Tesla, so perhaps easily forgotten. But here's Winnebago Industries. You see the earnings and revenue up. It had pulled back, giving us a little saucer here. I've got pretty good support down here, I would think. And it looks to me like it wants to break out, and it's breaking out to new highs, although it pulled back into the highs on Friday, which I don't like. Everything is green. It's not extended. And if I look at it on a seasonality basis, is this something that goes up at this time of year or goes down? So let's look at it with a window of 30 days. And what one sees is clearly this is a stock that this is a very positive seasonality. Over the next couple of weeks, 8 times up, 2 times down, average up 18%. So I want to buy stocks that look like this, not stocks that are in the face of bad seasonality. Now, one of the things I saw today was that a lot of the oil stocks have pulled back over the last couple of weeks and looked like they were potentially at reversal areas. And that's interesting because we're getting into some better seasonality over the next few weeks. This is Anadarko Petroleum. It's up to 30. And if I just look at this last swing, you know, it's trading in the range. Here's your doji at the bottom of the range in a seasonal time of the market, so I might expect to see some improvement here. Possibly, not necessarily, but possibly. I mentioned that this would be my sort of my top-down approach, where I found stocks using my top-down analysis and then ran them through a filter on the seasonality. What I can also do is I could actually find somewhere in here, clear these things off, is my screener. Come on. There, it's got to be somewhere here. I missed it. And this is one of my favorite screens. It's called Derek's Slow and Steady. And I'm looking for stocks that are positive seasonality at this time of year. And I can set a number of different things. And what I wanted to do is look at the positive area. See which ones have had the best move. ADES. Well, I don't know anything about this stock, and it seems to have very strong seasonality during this time of year. Put my seasonality scanner back. But you can see that on both the 10-year and the 5-year, a very strong time of market. Don't know anything about the company. It might have been enough for me to look. How about LNG? Getting into a strong part, but probably too early. I don't like this red band here. But what I'm able to do is to do a bottoms-up approach where I can actually scan the market and look for stocks that have potential from a seasonality perspective. So just wanted to give a few words. This program is Magenta Trader, www.magentatrader.com. Derek Pilger is the person who runs that program. Has some free webinars. I'm sure I don't do it justice, but I find it to be a very nice adjunct to my trading routine. So enough of that. I like to get a concept of how the market was doing. So let's go into the spreadsheets. Take a look at last week. Now, I wasn't real active in the market last week. I had a lot of family come in, and you could. What I laughed about was S&P was up 0.06%. Hence, why my title was Z's, sleepy. There's a little bit of volatility, but at the end of the day, it finished almost where it started. My holdings did a little bit better, but really no different. This would have been if I didn't trade and I kept everything. My buy watch list was substantially higher than the S&P, but still nothing doing at 0.5%. Although, who am I kidding? If I was up 52 weeks, 0.5% a week, that's a 26% run. IBD 50, a little bit above my buy watch, about the same. Interestingly, the HGS 100 had a great week, up 1.7. High beta stocks were in vogue. This is a screen I do for high beta stocks, and you could see that they were up 2%. I always make money when high beta stocks are doing well. The problem I have is when high beta stocks are underperforming, and that's when I usually do poorly. Best of Woodward and Brown had a great week, up 3.33. Don't know much to do about this, but this is a Metastock screen that I've been noticing keeps coming to the top. Both this one was up 5.69%, and the other one is Blue Sky. Let's see if I can find where it was at. I don't want to spend too much time. I've just been playing around with some new scans, and I found a couple that seem to be, here's my long Blue Sky breakouts, which didn't do that well this week, but it was about 300 stocks and still outperformed the S&P 500. Just curious what they found in this, and let's see, Adapt Technology was up 29%. The Governor and Company of the Bank of Ireland. This bank has been on fire. Just sort of kills me, the Bank of Ireland. Universal Insurance Holdings, which was found on the next scan, was a big winner, up 31% on the week. I know it was VectorVest top stock, or one of the top stocks as well. So I know that the market was flat. I look for Hindenburg's. Remember, this is a sign of a top. It's when the pros are selling and us amateurs are buying. And what you could see right here is not much is doing. So no signals, which is good. That means the market's still not necessarily topped out. I like to look at EdgeRater. bucketology. On this chart, I look for three things. I look for the number here, which tells me that 72% of stocks are in the S&P 1500 are trading above the midline of the Bollinger Bands. I also see that only 8% are above the top band. So we're definitely shifted to the right, meaning a very bullish picture of the market. But I don't see us so extended that we have to pull back. These are all edge rater screens, by the way, and I got to tell you, doing this in Excel or by hand without edge rater, frankly, even using the spectrum analyzer in HGSI, which is another way of doing it, is a lot of work. And edge rater just automates this for me. The market, this is looking at a couple of different things, so a bunch of markets, and I'm looking at it more globally than any one in specific. I've got percent change B in the first column. The second column has let's see, this is a change in percent B from yesterday. So remember, kahuna at 0.24 is a small kahuna, 0.4 is a big kahuna. So no kahunas over the last 5 days. This was a buy signal back on the 21st of November. This is the absolute number of percent B. And I know that in a behaving market, it's going to be green. Now I notice I've got a number of indexes trading at or above their upper Bollinger Band. Those will be the numbers above 1. That is somewhat concerning about topping, but they have a tendency to keep going, and that I'm not going to put a lot of weight. I do put weight the fact that that is predominantly green. I have bandwidth, and I know that in periods of time of increased stress and volatility, bandwidth can increase. And then lastly, I have percent B times the bandwidth, which is Woody's, I guess we call it the bullseye indicator. And, you know, I don't see anything here that's going to worry me and tell me that the market's going to roll over. A couple other things on this spreadsheet. The George Lee indicators built into EdgeRater. And if you don't know these things, these are reasons in themselves to come to our meeting in February, looking at squeeze and types of breakouts. And you could scan whatever list. I look at all stocks above $2 and 150,000 in the HGSI database, and I scan for signals. And then lastly, we're going to talk later about my group inclusion filter. So I basically run this analysis, I build this up, and I put it into a library so I can always go back and review them. I like to look at TradeStation for a couple of things, and mostly from a market perspective. So let's look at the S&P 500 to start. I see blue, blue, and green. So I know that blue is sort of a caution sign. I can do anything I want. It's not a sell signal. It's not a buy signal. I can hold, I can buy, I can sell. But it's a signal perhaps of a tired market. And as I pointed out ad nauseum, we're getting higher highs without breaking the midline on the MACD, on the histogram, or on the line getting higher. So higher highs in price without reflections of a higher high in the MACD tell me that we have a market that does not have a ton of pressure and support to keep going higher. We call that a MACD divergence. Doesn't call the top, but it is another, you know, it's one of the first signs that I've shown you tonight of continued concern a little bit. Now, perhaps, I don't think it was volume driven. I don't think volume matters here, but this was a low volume, low volatility week, and we'll see if we can turn that around this week. But you really want to see, as you get a higher high, you really want to start seeing a higher high on the MACD as well. On the NASDAQ, green, green, and green, above its envelope, which is bothersome. Everything closed off intraday and closed near the end of the day, low of the day on Friday, but I'm trying not to put too much credence in that, especially since it was a holiday shortened session and low volume. And again, higher high versus this high in the MACD divergence. And if I look at the Dow, blue, green, green, MACD divergence, so the same story over and over again. I like to get a sense of the market by also looking at, about 1,000 stocks, which I watch on a real-time basis, and just to get an idea. And we had 4 Bible gaps on Friday. Perhaps not a big surprise when one considers that it was a shortened day and therefore lower volume. Mobile breakouts from a squeeze, had quite a few of those. Mobile breakdowns from a squeeze, not so many. So it's where we are right now, and I think I'll be fine on bandwidth. So let me just shut that down. Let me make sure I'm recording this. Yep. All right, let's jump into HGSI and do my journey there. I'm looking at about 32, 34 minutes thus far. Those who haven't been here before, I always spend a lot of time on the market because I'm a big believer that that's a bigger determinant than my stock picking, even though I think I'm a pretty good stock picker. So let's go down to Woodward and Brown user groups. Major markets plus, top-down analysis, gives me more of a, it's all technical, but more than just a couple days review. Shows me the strength of the market is in smaller stocks. That's why we've been making money. NASDAQ small cap 600, Russell 2000, weakness in the dollar, some of the bigger things, the Dow Jones Industrials and the S&P 500, weakness being relative. They still were up, and I think we saw that on the TradeStation charts that the NASDAQ was the strength. Let's take a look at a couple of them. If I look at one-day performance, I can see that the winner was volatility, although for the week it was up 8.2%. Still relatively low at 13.7. Silver and gold were winners on Friday, down for the week. And over the last 5 trading days, NASDAQ 100 and Composite and Russell and small caps outperformed, with the laggards being the utilities, oil, gas, the dollar, and some of the bigger stocks. All right. S&P 500. Pretty much, well, I don't want to say a straight line, but we continue on our upward descent. And, we're at the top edge of the Bollinger Band. Everything is green. There's no force because there's no volume. Not quite at the top of the high jump for extension. This is what the top looks like. But, we're certainly at a point where the market has reversed. But still looks great, still bullish. I look at the NASDAQ. You can see moving at a higher inflection point up. Everything is green. Definitely extended near the top of the high jump bar, maybe a little bit potentially worrisome. If I look at the Russell 2000 as an example, small stocks, looks a lot like the NASDAQ at the top of the Bollinger Band. Everything is green, not quite at the high jump bar. If I look at the dollar, I see it struggling here around this 50-day and 17-day moving average. As I've said multiple times, I won't be a buyer of the dollar or a big believer until it can get above the 200 and actually stay there. It's failed there in the past. I look at volatility, which we already know it had some up movement this week. It's still quite low here. And just like the dollar, it's got to get above its 200-day moving average. So for a slow trading day, holiday, shortened period of time, there was considerable volatility increase on Friday. For sake of argument and completeness, gold still in a boring, not boring, but horrific downtrend. I can't get above, the 8 is below the 17, which is below the 50, which is below the 200, so perfectly aligned for a bearish looking appearance. And I'm not a buyer here until it convinces me and gets above the 50, and frankly, I'm not going to be a believer until it's above the 200-day moving average, at which point I probably missed the entire run. And silver looks just like gold, just with less luster. I want to take a look at markets. Let's go to industries. 145 industries. You'll see a very bullish picture here, which is I've got 72 that have positive force and only 12 with negative force. Take a couple moments here at the ones with negative force specifically. Investment bankers and brokerages had been doing quite well up until recently. Airlines, I think, had a negative week, sort of digesting some of the gains they did after the American Airlines U.S. Air merger was approved. REITs took it on the chin, as did railroads. But that was it from a downside perspective. Lots of upside, although I got to admit, not as many upside stocks as I might have expected, and perhaps this week of low volume is to blame for that. Up on top, no surprise, considered seasonality with a 5.6% over 5 days move was biotechnology. Don't know anything about Sarepta, so I'm going to be purely a technical reviewer of this, and I see a broken down stock. Maybe it's a great company. It doesn't make money. It loses a ton of money, mostly in a downtrend here, big gap down. Maybe it's going to do a little bit of a pinball action and try and work its way up, but I'm not buying a stock that looks like that. Gilead's one of my favorites, continues in a nice, powerful move. It's close to being extended, but everything is green, big power move. This is what you want to see, the 200 below the 50, below the 17, below the 8. As the stock gets extended from the moving averages, we trigger the high jump indicator, and typically we trigger a time when the stock wants to pull back. That's a beautiful chart. Alexion, a lot looser, as you could see. It's been a big darling if you go back several years. You could see the big run-up from 2010 to where we are today. And except for a downtrend between November 12 and maybe August of this year, has really been just a fascinating thing to watch. And they potentially are getting ready for another up move. Biogen IDEC. Go back and listen to my videos from the last couple of weeks. We called this one. We basically called Biogen IDEC coming up through the 50 as just a great opportunity to buy a leading biotechnology, leading growth stock at a discount. Stock looks great, although obviously it's had a big run-up, Bible gap up here, Bible gap up rules, according to Morales and Catcher, should be followed. Don't know anything about Array Pharma, don't like downtrend here, but broke above the 50 with a kahuna, a DI crossover, a green candle low the day before. I'm intrigued and probably want to do some research. These are not easy stocks to buy because they've got no earnings, and lots of times they're about a story. Carex, ditto. Pull back to the 17, looks like it wants to run. Everything is green, doesn't make money, story stock. Oxygen, ditto. Doesn't make money, story stock, had a huge run up a couple weeks ago, looks like it wants to run again, waiting for a squeeze to form here. You can see the strength in the group. NPS, that's one that I played off and on, looks like it put a bottom in here, wants to run. I'd rather buy it above the 50. Celdex, I think I mentioned last time, this was a darling, stalled at the 50, it's got to break above the 50 for me to be interested or for you to spend your money on it, in my humble opinion. Anything else I want to look at here? Yeah, Gentium Spa, this was a pick that we looked at last week. And this one to a nice move, top of the channel here. I don't know if it's squeezing. Let me see. See if we had a squeeze on this. So I'm going to look, first of all, I got the TTM squeeze indicator, which is, so there's no squeeze on this. TSAR reversed, mobile breakout there. There's probably another mobile breakout in there as well. So that's Gentium Spot. Look at the earnings per share here. I looked at MarketSmith. It's not a one-month wonder. I think that stock looks very interesting, although it has had a nice run already, so be careful. I think that's enough of those. Second group down, computer hardware. Is it time to buy Apple? Maybe. Let's look at seasonality just out of curiosity. I should know this by heart on Apple, but I used to know everything about Apple, and I sort of lost interest. It became much less of a fun stock to trade for me. It was much more fun when it was a $60 stock, to be honest. Oh, yeah, that's U.S. Steel. Huh? Be still my beating heart. Yeah, I mean, not much right now. Apple's big time of the year is in March. In an uptrend. So you can see how it trades in a range? It's at the top of the range and some weak seasonality. Which way do you think Apple's likely to trade this week? I think it's likely to trade down, so not too much interest in me going long on Apple. Hewlett-Packard, I'm not interested in the company. Boy, this one's been not for the faint of heart and weak of stomach. I have a pretty big position in DDD, but I've had it for a long enough time. I wrote out this pullback here. I was sitting in Vegas ready to hit the sell button, and then we had this day here, and I undercut the 17. And then I said, you know, it's now pulling back to a point that looks good. It pulled back to the 17, got back within the Bollinger Band. Looks like it's basing. I think long-term 3D printers are a good place to be, and I'm staying long this thing right now, although obviously it's had a lot of volatility of late. Semiconductors, we'll look at the first couple. Micron, you know, I didn't want to buy this for a long time because it got burned in the 2000 period of time, but I've been in it. I've been talking about it every week forever. I like buying it better at the 50. It's certainly getting extended and had a red candle high on Friday, but I keep my eye on this. It's got great fundamentals, great growth rate, and supply keeps coming out of the marketplace. Probably still a nice long. Himax, maybe setting up for a buy. Himax is the maker of Google Glass. Google has a piece of the company, so I don't think there's a lot of risk that they're not going to be chosen as the ultimate manufacturer. Stock had traded down and I got stopped out. And again, I got in at $3.50, so I wasn't too upset when I got stopped out. But pulled back on Friday, but it looks like it might be something to consider, or at least to watch. NXP has been a stock that has been interesting, had a nice move up here, basing. I had a kahuna on Wednesday and a pocket pivot. Might be something to keep an eye on. Next group, internet retail. Well, tomorrow's the big day for the internet retailers. You know, Facebook was a lot more interesting when it was $39 than it is at $47. It still has good earnings per share growth, but it's in a little bit of a downtrend, and I'd like to need it stabilized and give me a signal before I would jump back in. And when I say symbol, what could that be? It could be a green candle low. It could be a kahuna. It could be a pocket pivot. It could be a Bible gap up. It could be basing. It could be a candlestick that I like. And it's not giving me much of that right now. Amazon.com, boy, the king of internet retail. Only thing that bothers me here is that it is extended a lot. Trades at a multiple that's absurd, 1,400. But all of a sudden it's got earnings coming in, that multiple is going to disappear. So you've got a turnaround stock, big earnings coming in, came out, just got the new Kindle HD. I won't replace my iPad, but I'm going to keep my Kindle HD X or whatever they call it in my bag with my iPad. I like it for reading anyways. Great move up here. I'm just, you know, gap. This is a powerful move, and it's right up the top of the high jump. I'd rather see it pull back before I bought it, but I'm not sure I'm going to get a chance. Netflix, this is the king of the January seasonality. Tight, lower left, upper right, everything is green. Great earnings per share growth, trades at a multiple of 252, but it's growing at a multiple close to 400. I'm not against going long in this, especially when I look at this. NFL experience. do you not want to be holding Netflix long going into February? So you don't have to buy it yet, and it's a gradual up. It's in a nice little range channel, but you want to look at Netflix, and you want to go put it on your calendar sometime in the middle of January that you want to be in it. January 21st to February 3rd, 10 years up, 0 years down, average up 20.7%. That's why I like seasonality. Of course, this year it'll blow up on me, but we'll see. Priceline, as good as Netflix, as good as Amazon. These are incredible looking charts. All like to say the same thing, extended, expensive. If this market rolls, they fall first. The way this market is going, they may just continue to lead a lot longer than we think they should. Diversified banks. This was interesting. I mentioned or laughed about the Irish bank, but you know what? Something's going on internationally. There's strength in banks everywhere. Barclays chart doesn't look too hot. A couple of pocket pivots, a DI crossover, everything turned green. We'll see where it goes this week. National Bank of Greece has been doing nothing. It's been dead. It had a couple of kahunas. Everything is green. Is it turning around? I have no idea where Siki is. Sounds like it's probably Iceland, but I don't know that. Again, pull back 50. Kahuna, big positive day. Where's that Ireland bank? Banco, here's a Brazilian bank. Pocket pivots. Something is just happening here when it comes up to the top like this. Here's that Irish bank. Who would think that Ireland is leading like this? I certainly would not have thought that Ireland would be leading in the banks, but pocket pivot up, a gap up on Friday, all green. I think these may just be a sign of worldwide strength, and perhaps there's some values in these if you want to stick your toe in the water. Drug retailers, Rite Aid was a big one last week. It had this was on our list last week. It had 12% return over the last 5 days. Pull back near the 50. Now this is a squeeze. So let's go look at it. 1, 2, 3, 4, 5, 6. Let's look at Rite Aid going back 7 days, and I'll show you why this was so attractive. So Rite Aid has been in a squeeze now for some time, as you can see right here. Buddy George. There was a mobile breakout right here. We have 1, 2, 3. So this is what I trade. I look for stocks in a squeeze that have a mobile breakout. It's been basing. Don't know anything about seasonality on this quick trade, and it broke out. And it was that mobile breakout occurring in the setting of a squeeze, and then I set a buy point above the close of that day, and I got into the stock. I guess that was Friday last week, not this week, but the week before. So that's exactly what I'm looking for. So I find it by seeing this and the pullback here, and I get into it with the mobile breakout from the squeeze. Something I've learned from my buddy George Lee. So that's kind of why he popped up there, because he knew I was looking at his stuff. CVS Corp, pull back to the 200. Nice move there as well. Why would retail drugstores be doing well? I think they're winners of Obamacare, just like drug distributors, and we'll look at McKesson later if I remember. Anything that's volume-driven should do well with Obamacare, and drugstores aren't volume-driven. Internet software and services, I guess not a big shocker. eBay, should be a good season for eBay. I've just sold 5 computers on it. Kind of ugly-looking chart, sideways, pulled back. I don't know if that's a morning star. It kind of looks like it. I don't touch things below the 200, so I would just say nice. We'll see what happens. Do like Baidu. Basing, breaking out above the upper Bollinger Band here, pull back to the 50 with pocket pivot. It's expensive. It does have some earnings coming into the stock next year. Certainly worth a watch, at least. Sohu, bouncing around that 200-day. I'm afraid of overhead resistance here at the 50, but did have a Kahuna DI crossover on Friday. Kind of a bottom fish, don't like the upcoming earnings. Yandex, a Russian internet provider, this had been a big move from about 24 up to 44. Pulled back to the 50. I don't think it's a cup yet, but this might be setting up a viable pattern. It might be worth watching. Mostly green. The Bongo weekly is red because it's still in that downtrend. Probably going to set up a squeeze. We'll see. All right, continuing down. Don't want to do it that way. If you don't do this the right way, it takes you back to a different area. So let me go back into my industry groups and system software. Microsoft and Oracle, we had a quick look there. Microsoft had a big run off this 50-day moving average. It's getting extended, had a nice day on Friday. Everything is green. I don't buy stock. It's not enough growth for me. Oracle, another stock without much growth. It really hasn't done much. I'm not that excited here. Remember, Force looks at change in price as well as volume. So some of these big stocks with lots of volume end up getting on this list. Casinos and gaming, I have lots of interest there. I own Las Vegas Sands, I own MPEL, and I doubled down on my Caesars Entertainment. Improving economy, maybe we have one. Should be good for gaming, and especially if you have any interest in Macau. Here is Boyd Gaming, a pretty hard sell-off, got above the 200, had a Kahuna DI crossover, not my favorite. Las Vegas Sands, nice uptrend since pulling back to the 200 in June. Give us a 50-day in the middle of November. I think it wants to run again, or I think it's in a squeeze. Let's see. I like to find stocks in a squeeze, and then I look for that mogul breakout. And I've got a lot of toys. You see the squeeze here. I had a mogul breakout on Thursday and a PSAR flip on Friday. So that's a very interesting looking chart right there. I love this. I can watch all day long, and I get alerted to those stocks that have mogul breakouts during the day. If I already own it, it's not on this list. What else do we got here? We have MGM. This has been a big leader this year. Pull back. Looks like it's rested. Maybe it wants to run again. I think this is a good group to be in right now. MPEL is sort of the all Macau play, and I bought more when it came down and kissed its 50. I think it wants to go. Also looks like it's in a squeeze and wants to break out. The next group down are home builders, and I'm not convinced yet on these guys, although enough people want me to believe that they're in the early stages of their recovery and not the end. And you could see they all had a good 5-day period of time, but these are all stocks that have been pretty beaten up. We'll just look at Lennar, maybe in the below the 200. I like to see it get above it and stay. And why do I care about major moving averages? Support on the way up, broke through here, resistance, resistance, resistance. I got to show that it's no longer resistance for me to want to jump into and play in the water. DR Horton really looks the same. I mean, resistance at the 200, got to get above it, so it's got a buck more to go before I'd be very interested long. Pulte stalling out at the 200. We'll see if it can hold it and go up. Other things that made the top stock list. I mentioned Winnebago. It's not as sexy as Tesla, but mostly green, all green, yellow in accumulation, makes money, trades at a multiple of 27, grows twice as much, had a flag formation base, looks like it wants to run again. Seasonality is on your side. And I mentioned steel looked good seasonality-wise, and you could see, just look at a regular chart of U.S. steel. Is this stock pulling back and going to come back down, or is it just pausing, refreshing to run again? I think it's going to pause to refresh, and based upon seasonality, it runs again. Now, my son has taken up investing. We had an interesting discussion yesterday about fundamentals versus technicals. Fundamentally, this sucks. It's got negative earnings per share growth and loses money. My guess is that no one cares, and that it's going to do what it does, and the seasonality is very strong, and people are looking at valuation today versus the next couple of years. So I'm a balanced. I look at earnings per share growth. I also look at technicals. Now, I'd rather buy something that makes money and is growing their revenue and their earnings during a time of positive seasonality, but it's hard to argue with the seasonality chart. And refiners up to number 19, point that out. Pharma, a couple of these that I still like. I think I talked about Jazz last week, and Jazz continues to have just a great run. It's got earnings per share growth. It also has based in Ireland, so somebody's likely to take them out because of the tax breaks. And even though it's a big stock, it's only a $6.8 billion company. The other one that we talked about is Valiant, who's just sitting right at I would think, an opportune buy point married to its 50-day moving average. If anybody emails me, I'll be happy to send them this little thing. But basically, I said, well, you know, what do I like to buy? I want to buy, see if it's not in here. I want to find stocks. You know, it's in one of my other computers. I built a pullback screen, and basically the screen requires to have a, let me see, it's not in here. All right, I teased it for no reason. So basically what I wanted to look for were stocks having a kahuna above the 50-day moving average, and within a few percent of free parking. Now, I don't see it here. I'm going to pause the system, and I'm going to send it over and import it. Hold on one second. All right, on second thought, I'm not going to do it now. I thought I could easily export it over here, but that computer froze on me, so I'm not going to export it. So I will promise you next week I will show you my little filters, finding pullbacks, throwing kahunas above the 200-day within a couple percent of the 50-day moving average, looking at stocks that look a lot like Valiant, meaning stocks that are in an uptrend, that have pulled back to the 50, which is free parking. Give me a kahuna, tell me that they're starting to run again, and you find 10 or 15 a day. So I will actually promise to do that next week. All right, so I've now looked at the top sectors or groups, talked a lot about seasonality. How about individual stock picking? So let's go into all securities. And you know, one of the things you can do is just go into Woodward and Brown, repeat after me, archive, reference, miscellaneous, Sprinter One Step with Bongo. And these are some of the best stocks that you're going to find in the marketplace. There's 101 stocks, so let's look at a couple of different things. Let's look at industries. Lots of biotech stocks, healthcare equipment, communication equipment, pharmaceuticals, and trucking. Now, trucking, I thought a lot of them looked like they were getting tired, but truckers have really been doing well. You notice none of them were in the top 10, so that was consistent with my looking at a lot of charts. So you can see you have 101 different stocks met the Sprinter filter, which are great technicals and great fundamentals. And you notice that there's about 6 or 7 different industries that matter. That should tell you something. This is not broad-based anymore. It's narrowing, and these are some of the best places to be. If we look at raw combo, I mentioned I wanted to show you McKesson. We'll look at a couple of these. McKesson, Cardinal, and AmerisourceBergen all are in a sector that wins based upon volume. The stock is extended by any means. It's expensive. It's got a multiple of 20 and a growth rate that's slowing down. But it is a leader. It is a great company, and they've got great management. And I like them a lot, even though I sold businesses to the other two. Don't know much about Aris Group, except it's in the communication equipment business, and really breaking out. But what impressed me with Aris is the earnings coming into the stock. Look at the revenue growth. Boom. Look at the earnings growth. Kaboom. Something's going on with Aris. This is a stock that I think has been similarly priced since I owned it maybe a decade ago, and something's changed here. This is going back to 2005. I like it. I don't like it as extended it is, but I like it. I look at this growth rate, and I see something that I want to be part of. Ryder is just an example of the trucking industry, and nice move up on the trucks, all green. This would actually make some money. Horizon Pharma, we talked about this a lot in Vegas, and had a gigantic move up here. Doesn't make money, don't know much about this guy. Maybe Ghilardi will put a comment on the board. Here's your Biogen, Jazz, your Gentium Spa, another trucker, Valiant. So a lot of the stocks we picked up from a top-down review, probably half of these actually made it onto the sprinters. Before I say goodnight, let me do a quick group inclusion filter, and then we will say adios. So for those that haven't been here before, these are lists of great stocks. Here are more great stocks. Here are green candle lows, and just leave it at this. So if these are lists of great stocks, would it make sense to you that if a stock was on many lists of great stocks, that maybe that stock would be a great stock? All right, let's figure that out. So let's go here at Tools, Group Inclusion Report. This thing is so easy it feels like cheating. Make a group, Web, Gem, 12.1, 8 p.m. I'm going to look for the top 10 because I don't want too far already. I'm going to pick those groups that I like. How about highs, best criteria, best of, best under 15, demand, ERG, growth, HGS, leaders, QEPs, stocks groups to the upside, EPS relative strength, turnarounds, and then we're going to throw in for hell of it, Bible gap ups and pocket pivots. I'm going to hit OK. Save it as top 30, who cares? And what do we see? Nope, here. These are the winners of the group inclusion filter for 12/1/2013. Yandex, we looked at them, the Russian internet provider. Wisdom Tree, which is a financial stock that we can look at. Jazz Pharmaceuticals, I already showed you that. Aris, the communication. Hilltop, a insurance company. Gentium Spa, Alexion, Santeris already been bought. So this is a way I think of prospecting to find great stocks. I can go down here and find my web gems. 12/1 p.m. There's my top 10. Let's do a warehouse view, and let's quickly run through them. I'll make my parting comments and say good night. So, why do I like top down? Because I think you find stocks where the sector is behind your back, pushing you instead of pulling you down. Why do I like bottoms up? Because it's another, you fish from a bigger pond. Alexion was a winner, tops down and bottoms up. This is that great biotech company. Looks like it's setting up for another run. Aris Groups is that communication technology. Jazz is that Irish-based pharmaceutical company. Hilltop Holdings, this is one that I made, what a dummy. I bought it here, sold it here, didn't buy it here. So I made the small piece, I missed the big piece. Why? Because I thought with the earnings per share monster slowing down that the stock would give it up, but it remains a leader. Doji up here had a couple red candle highs, looks like it's getting tired, buy at your own risk. eHouse is a Chinese retailer, wouldn't it be nice to be another Biff Shop Holdings, pulled back to the 17th, sort of a good time to think about buying it if you're so inclined. Gentium Spa was that small pharma biotech company that I liked we started off with. Yandex, the Russian internet provider, we've already looked at it. Here's Wisdom Tree. The most notable thing about this company is Maria Baltaroma is married to the CEO. Great earnings per share growth, some earnings revenue growth as well. Everything is green, broke out to an all-time high. A couple of kahunas in volume earlier in the week on a low volume week, something to keep an eye on. Ambarella, I can't remember what this is, a semiconductor play. Nice move here off to 50. Don't like the earnings per share growth, do like the kahunas, something to do my research on. Santeris is already a buyout. So, a couple of comments. One, seasonality is behind your back right now. That doesn't mean the market has to go up. It just means that based upon the past 20, 30, 50 years, that December is usually, but not always, an uptime in the market, and led by the NASDAQ. No shocker then that we're starting to see leadership in the smaller stocks and the NASDAQ stocks. So my feeling is that this market has had a long run. We're in a good part of the year. The Congress won't make a lot of problems until the beginning of the year. Obamacare seems to slowly be getting fixed, at least the sign-up piece. Barring some catastrophe or unknown news event, or some Fed head burping and saying tightening instead of belching, or removing the easing, I think the likelihood is the market's higher on January 1st than it is on December 1st. So seasonality is your friend. We looked at sectors, stocks, etc. I introduced you to seasonality if you haven't seen it before. If you're a Magenta user, you're probably laughing at me because I'm not that good at it yet, but I hope to be better. I will be part of the Web 99 speakers as well. And again, just want to finish on this. This is a meeting notice. You need to reach out to me very quickly if you're interested, because I'm going to make a yes or no decision in the next 2 weeks based upon how many people reach out to me. I anticipate it being, not anticipate, it'll be on the 14th of February, we'll do a meet and greet. You can get to meet George Lee, truly a great investor and trader, mostly an investor and short-term trader. Not a day trader. It'll be held in New York City, most likely in my condo meeting room on the Upper West Side. The topic will be great growth stocks, how to find them and how to trade them. We'll use all the tools that you see me use on my webinars. We hope to get added guests. That depends on how many people attend and who's available, and the anticipated cost being about $750 per person. That is not a commitment on cost. It's based upon what I think we'll be able to do. If I get a lot more people, the cost will come down. If I don't get as many people as I anticipate, the cost will go up. I need to commit to this by December 15th, so I need your responses quickly. Have a great week in the market. For those traveling home from Thanksgiving, hope you had a happy holiday and travel safe. And I'll see you next week. And I'd like to welcome my son, who's finally decided to join the investment world, and it's not my little protege. Right? We'll have to see how that goes. Good night, everybody.